Riot Platforms RIOT climbed after investors saw a bigger data center story behind the miner. The company's AMD agreement doubled committed high-performance computing capacity to 50 megawatts, and the infrastructure segment contributed $33.2 million in quarterly revenue. That is the key shift. Riot is still a Bitcoin miner, but the market is now watching whether it can become a broader digital infrastructure provider. The immediate pressure point is AMD capacity, infrastructure revenue, Bitcoin production costs, cash reserves, and the next quarterly revenue mix, because the first reaction only matters if those signals confirm it rather than fade. The confirmed first quarter numbers show the tension inside the business. Total revenue reached $167.2 million, slightly above the comparable $161.4 million. Bitcoin mining revenue fell to $111.9 million as network competition and operating variables weighed on the segment. Riot mined 1,473 Bitcoin during the quarter, compared with 1,530 Bitcoin in the prior year quarter. Production cost per Bitcoin rose to $44,629. This baseline keeps the story grounded in Riot shares rose after first quarter results showed expanding data center revenue and a larger AMD high-performance computing commitment, and prevents early attention from being treated as final proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is diversification through power-heavy infrastructure. Riot Platforms RIOT can use energy assets, engineering expertise, and high-density data center capacity for clients that need compute, not just mining machines. The AMD commitment matters because it gives the infrastructure segment a named enterprise demand signal. Engineering services also grew to $22.2 million, reinforcing the idea that Riot wants multiple revenue streams rather than one mining cycle. Mechanically, the company is using power and infrastructure assets to build revenue streams that are less dependent on Bitcoin mining alone. That link is what turns the headline into a concrete risk, access change, liquidity test, or adoption signal. The impact is on public market investors deciding how to value mining companies. If Riot's data center business grows, the stock may be judged less like a pure Bitcoin production vehicle and more like an infrastructure platform with Bitcoin exposure. But mining still matters. The company ended the quarter with 15,679 Bitcoin, valued around $1.1 billion, and $282.5 million in cash. That balance sheet gives Riot room, but execution still decides the pivot. The affected side is specific. Equity investors and miner watchers need to compare infrastructure growth against weaker mining income and rising production costs. That group feels the practical consequence before the wider market has a settled answer. What remains unclear is the speed and margin quality of the transition. A 50-megawatt AMD agreement is meaningful, but it does not erase falling mining income or rising Bitcoin production costs. Infrastructure revenue has to keep growing while mining remains competitive. The unresolved question is whether Riot can scale data center demand fast enough to offset the pressure that comes from a harder mining network. The limit is also specific. The pivot still has to prove that enterprise data center revenue can scale faster than mining pressure rises. Keeping that limit visible prevents uncertain data from being treated as certainty. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Riot Platforms RIOT, the next signal is the revenue mix in the following quarters. Watch AMD capacity delivery, infrastructure revenue, engineering services growth, and production cost per Bitcoin. If data center income keeps expanding, the pivot becomes more credible. If mining pressure absorbs the gains, the stock reaction will look more like excitement around a strategy than proof of a transformed business. A stronger follow-through would show up through AMD capacity, infrastructure revenue, Bitcoin production costs, cash reserves, and the next quarterly revenue mix. A weaker read would appear if those signals fade or fail to confirm.